Hi, everybody. Welcome to the July 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Chris Fasciano, and I am Commonwealth's Chief Market Strategist. Markets continued to rally in June, capping off a solid quarter for investors. This was largely a continuation of the strong rebound for stocks that we've seen since late April. The S&P 500, Dow Jones Industrial Average, and NASDAQ were all up for both the month and quarter. The story was similar internationally, as a solid June contributed to a positive quarter for both developed and emerging market stocks. Even bonds did well, as falling interest rates led to positive returns for both the month and quarter. While the Federal Reserve kept short-term rates unchanged at the conclusion of their June meeting, expectations for rate cuts in the third quarter have recently risen. As was the case in May, markets were supported by the continued cooling of trade war rhetoric during the month. The trade deal reached between the U.S. and U.K. came into effect at the end of the month and could serve as a framework for further deals. While there is still a lot to figure out when it comes to trade, the recent developments have largely pointed toward further progress in the months ahead. Instead of focusing on headlines and policy risks, investors were able to shift gears and look toward the fundamentals. Final first quarter earnings were better than expected. On average, companies in the S&P 500 saw 13.6% earnings growth during the quarter, well above analyst estimates for 6.6%. This strong performance was widespread, as all 11 sectors beat expectations. Over the long run, fundamentals drive performance, so the continued earnings growth during the quarter was a good sign for investors. Additionally, the breadth of earnings growth was another positive development, as it signals that U.S. companies across industries are performing well in the current environment. The economic updates released during the month were also broadly positive. The May job report showed continued solid hiring, as 139,000 jobs were added, while the unemployment rate stayed flat at 4.2%. Consumer sentiment, which had been challenged all year, surged to a 4-month high at the end of June. This marked the first increase in 6 months and could be a sign of further improvements ahead. Given the importance of consumer confidence and spending on the overall economy, this will be an important area to monitor in the second half of the year. Despite the solid fundamentals and positive economic backdrop in June, markets face real risks that should be acknowledged. While we've been keeping a close eye on geopolitical risks given the ongoing conflicts in Ukraine and the Middle East, global tensions ratcheted up even higher in June following Israel's attack on Iran. While hostilities were short-lived and the market impact was minimal, this serves as a reminder that risk can come from anywhere at any time. We continue to face high degrees of uncertainty from Washington, driven by trade, budget, and tax negotiations. While the most likely path forward is for further trade deals and more clarity on the budget and tax fronts, policy surprises could serve as a headwind for markets in the months ahead. Overall, we are still in a good place as we kick off the second half of the year. Market fundamentals remain sound, and the economy is relatively healthy. While there are certainly risks that investors should pay attention to, over the long term, the expectation is for further economic growth and market appreciation. That's it for this month's update. I'll be back next month to walk through whatever the markets throw our way. Take care, and thanks as always for watching.